Morning to you all. And last week we have discussed, I think you were in online, we have discussed what? So basically risk assessment and the analytical procedures, right? So just to recall what we have discussed in the last week, we did that we want to do the risk assessment. Why? Because we are going with the, or we are dealing with the risk-based audit approach, right? Risk-based audit approach. In that case, definitely we should assess the risk, right? To assess the risk, very important tool is what? Analytical procedures, right? So by doing the analytical procedures in the planning stage, so we are able to identify what are the inconsistencies, what are the deviations. So where we want to focus more. So that will support in planning stage very much. Right? So that's what we discuss in detail, and then financial statement analysis, so the ratio analysis, and even so in terms of auditing we termed it as analytical procedures we can perform in the planning stage, and then performing stage and the reviewing stage. So all we have discussed, right? So when it comes to the analytical procedures, we can do the horizontal analysis, we can do the vertical analysis, or even the trend analysis or the ratio analysis. By doing whatever the analysis, you will be able to identify what are the areas we want to focus more, what are the areas that we can have average risk or moderate level of risk of account balances, right? That's what we have discussed so far with the SLUS 520 analytical procedures, as well as SLUS 315 and 300 and 320. So in the planning stage, right? So with that, today we are moving to some of the other areas. I supposed to discuss two aspects, that is using the work of internal auditors, that is SLUS 610, and the auditor's responsibility on fraud, right? So that will be discussed through some sort of the forensic accounting concepts as well. So that is the today's plan. So far any comments, any clarifications, right? You will be, so before starting our discussion, you will be given the assignment, right? No? Not given? So far not given. Assignment? I have discussed, right? So you can get a research topic, research, whatever the research, you can make a presentation on that. Okay, I will put into the LMS, right? So it is not given, right? Okay, I will put into the LMS this week, right? So what do you want to do is, you want to select a research article in auditing, right? So any other related areas to the auditing, so internal auditing or external auditing or forensic accounting, so something related to the auditing and assurance, and you can make a presentation on that, right, based on the concept they are talking, they are addressing. So how do they perform, and what would be the outcome, and how do we apply that context into our context, local context, right? That research application to our context. So that's basically the area you want to address, right? I will put into the LMS. I think it is given with the course outline. Either we can have that one as a group assignment or individual assignment. Huh? So you can have the presentation by 13th week. This is 5th week. 13th week you may have the presentation. So the students, those who are in online can do the presentation through online, right? So it's all right. Right. So it is given the opportunity to have group assignment or the individual assignment. It's you can select whatever the mode. So some are in outstage. I mean uh, some else. No, I mean not coming online, or even I mean they don't come with the physical participation. Then they are in out of the country. So then they can do that individual assignment, no issue. So they can do the presentation, and those who are physically attending, even 5 members group can do, no issue, right? So it's up to you to decide. So I will put all the guidelines over there, right? Right. Yes. Sorry. It is given. Yes. I have put there. Guidelines are given, right? That's why I can remember. So this is how it goes. Right. So guidelines for the assignment and presentation, everything is given. You should need a review article individually, or as we are going as a group, maximum is we'll make it as 5, right? It's all right, 5. So then providing a report for the article review is required. Your report should not exceed 3 pages excluding cover page. So papers, I mean number of pages, it's not a compulsory rule. So it's up to you to decide whatever the important information you can take it up. So whatever all that the guidelines are given. So it includes 30 marks for the presentation and the report, and remaining 20 marks. So again 20 marks for the online quiz. So that will be end of the the discussions. So you can do so before the exam date, right? So 20 marks, then altogether 50 marks completed. So then final 50 marks you can earn in the final exam, right? So that is the plan. Already I mean discussed. I am recalling now again, right? In the first day I discussed. Even you can't remember that assignment is given. That's why I just recall, right? So only that you can go with maximum 5 members. It's all right. So or either individual. So those who can't take that others. I mean because of the distance and all that. If it is a situation, even individual assignments are entertained, or even maximum 5 members. Any comments? Can you find research article? Or case study? Both are accepted, right? Research article or case study or any contemporary issues. Now I don't know whether you are aware now, new audit report is coming in, right? So what we are discussing, what we are using at the moment is, going out, and that will be replaced with the new audit report, comprehensive one. That type of, contemporary matters, you can take it up, right? You can take it up. Even you don't have the topics, I can give it to you. But again, that will be somewhat, comprehensive. So then it's better, selecting by yourself. And again, you want to select a research topic or the research article from a refereed journal or reputed journal, right? Research journals, MRL, JSTRO, whatever that Science Direct, or like you should select from a refereed journal. Then only that research quality is there. Otherwise, some research are there. No proper methodology, no final results in a proper way. So then it will take less marks for you all. So therefore, it's better to select good research article, right? So if you are using that type of the research article, even you can take that research article to develop your proposal as well. Now already you are developing, right? That's how. Right. So anyway, that's what you want to do in here. So then it will take 30 marks. The remaining 20 marks for your online quiz. So that will be end of your, the sessions. So before the exam date, you will have the quiz. Right. That is the plan. I am recalling again. So what I discussed in the first day. Right. So again, you have that free time, next couple of weeks. You will be able to do something. So during that period, otherwise, you may get stuck with all the assignments and everything, right? So at the end, so you may have enough time, even 2 months from today onwards, to complete this. So even you have some vacation during these weeks, so you will be able to do that. Do a quality work, then you will get more marks. If you are not doing a quality work, then you get less marks. If you are getting higher marks, it will be helpful to have good results in your final exam. Right. So that's what I want to tell you regarding your assignments and the continuous assessments. Any comments? Those who are in online, can you hear? Sorry, I just forget. Any comments, any clarifications? Yes, those who are in online, can you hear? Nobody is commenting. Right. Okay. Right. Any comments on your assignments? So any clarifications to be done? Yes. Are you clear on your assignments? So that is in your course outline. You can refer to that. Any comments? Yeah, you can download from some journals, research articles from Emerald, right? So Pro, then Science Direct, right? So some of the other, the refereed research journals, right? So you can refer to those and find good research article. So then it will be helpful. At the moment you are doing that literature survey and all that for your research proposal. Huh? Sorry? Did? Do it. So then same thing you can do. So what are the research journals you are looking into in that case to find your literature for your research proposal? Emerald. So the other whatever the research, I mean the referred research articles you can see. Okay, any comments? Right? Right. So do you have any issues regarding your assignment work? Are you clear? Yes? Right? Okay, then actually the objective is to identify the concepts in I mean whatever the research article you are selecting, and what is the process and what is the application and what would be the outcome and how do we utilize, so how do we apply that knowledge in our context. So that should be addressed in your presentation and in your report. That is what is required, right? Okay, so with that I will move on to our today's discussion. So this is used in the work of auditors. Now, who are we? So in this subject, who are we? Maybe the internal auditors or the external auditors. Most probably we are the external auditors, right? So then, who are the internal auditors? Who are the internal auditors? Yes? Sorry? Those who are working for the company. For what? Sorry? To control the procedures. To control the procedures. What else? What is their role? In simply, internal auditor's role is what? Yes? Do you have internal auditors? Then what do they do? They are checking all the documents for what? Sorry? To maintain the quality of the institute. Which quality? Huh? Prevent him from or regarding frauds and errors. Basically, internal auditors are focusing on internal controls. Basically, they are focusing on internal controls. Not only that, but basic focus on that. Whether this particular business or the entity is compliant with the internal controls of the system, company, right? So any deficiencies in their existing internal control system. So then what do they want to improve? What are the loopholes? What are the drawbacks? Right? They will monitor internal control system. Right? So that is the basic objective. So now that the internal auditor's role has been expanded to a greater level. So they will look into the corporate governance requirements. So you have the internal audit committees. They will look into the risk management aspects. Right? So it depends based on their scope and the capabilities and whatever the strength they have. So it's up to the management to decide. But their main focus is to internal controls. Right? So as I discussed, risk management, corporate governance requirements, monitoring the controlling mechanism, and apart from that, they will look into the business operations, right? Manufacturing process, right? They will focus on operational aspects of the business as well, right? It depends based on the management requirements. But to that level, the internal auditor's role has been developed at this moment. Right? Now the concern, as the external auditors, can we use the internal auditor's work? Is it relevant for us? Now that is the concern we have. That is what SLS 610 is discussing. Can you use the internal auditor's work as the external auditors? Is it relevant for us? Can we get that? As you pointed out, they are the employees of the organization. External auditors are the employees of that particular organization? Yes or no? No. They will be appointed by the shareholders as an independent party, or as an independent, third party. Now the concern is, can you use the internal auditor's work, and is it relevant? First, it should be relevant. No? Is it relevant for us as the external auditors? Is it relevant for us? Yes or no? Yes? How? How does it relevant? Sorry? We can get the idea about the internal control system through by referring to the internal auditor's work. Yes? Any other clarifications? Okay. What else? Yes? Any more comments? So, as the external auditors, do we want to assess the internal controls? As the external auditors, do we want to assess the internal controls of the business? Yes or no? Yes or no? Yes. We want. What? We discuss with the risk assessment. As the external auditors, if the company is having proper internal control system and they are compliant, right? So then the assessed risk or the auditor's risk will be getting lower. Getting lower. We discuss control risk. We discuss inherent risk, detection risk last week. Right? So if you have internal auditors in that particular business, it means some sort of controls are there and they are checking on that. We have some sort of comfort as the external auditors, right? So then we can assess the internal auditor's work, or we can use the internal auditor's work, what they have done, what would be the, right? Right? We can talk to the internal auditors. We can inquire internal auditors. So what is the situation at the company? So do you find any frauds? Because they are working for 365 days in that particular company. Right? Therefore, they are very much aware on the company, processes and everything. External auditors are coming and do the review and whatever the audit and going out. But the internal auditors are there for whole 365 days, whole year. They are working on the whole process. They are very much familiar. So then internal auditors are a good source for the external auditors. Right? So what you can take as the external auditors, no issue with that. But it will be helpful for you, right, to assess the internal auditor, to assess the internal controls. That's all right. No issue with that. But the important point is, you can't depend on the internal auditors. What does it mean? By getting the information, so by referring to the internal auditor's work, right, your won't be done, your responsibility won't be reduced. It means what? You can't refer to the report. Since we have used the internal auditor's work, we come up with this opinion. No, you can't refer to the internal auditor's work. right? You understand? Even you cannot, so let's say you use the internal auditor's work, as a result of that you have to conclude that, the inappropriate opinion, if it is a scenario, you can't refer, since we have used the internal, come up with this opinion, no, right? You can use the internal auditor's work, no issue with that, but your responsibility won't be diluted, your responsibility won't be reduced, right? You can't refer work in your audit report or whatever the documents. It means, since even you are using the internal auditor's work, your responsibility is there. It means what? You are not responsible for their work, but since you are using, right? If you are using, so then still, so how do you, yes, even in that, your responsibility won't be reduced. At any point of time, you can't tell that, so I have used the internal auditor's work, therefore that's the reason to that's the reason to have this type of outcome. No, you can't tell like that. There is no, at the same time, there is no restriction to use that knowledge or use their work, right? You can use, but your responsibility is still remaining as it is. That's a simple conclusion on that, right? Nowhere you can refer to the internal auditor's work. So it means that you can use the internal auditor's work, right? You can get the support from the internal auditors for your external audit purpose, but you can't refer to that. You can't reduce your responsibility won't be reduced since you have used the internal auditor's work. But practically, if you are using the internal auditor's work, it will be very much helpful for your risk assessment, for your workings, to check the test of controls and everything. That will be very much helpful, right? So this is a very important point we want to address in the internal auditors or the use of the internal auditors work, that is SLUS 610. So that is the auditing standard on that. That is what basically discussed in the SLUS 610. So one more important point is there, right? What is that? When we are using the internal auditor's work, you have to first check to what extent it is relevant for us. Is it important or not? It is very much important. To what extent it is relevant for us, right, as the external auditors. Then next point is, to what extent they are independent. There is an independent level, right? Even the employees of their organization, we know that. To what extent they are independent. How do you check? To whom they are reporting? Sorry? Board of directors. So it depends. Some organizations, they want to report to the general manager, CEO, board of directors, to whom they internal audit committees, right? So what is the structure of the internal audit committee? Do they have, independent directors, non-executive directors, right? You have to look into those aspects. If they have more independence, what does it mean? We can have more reliance, we can have more assurance on their work. So another important point is, to professionally qualified or to technically capable, their capabilities, their qualifications, professional competencies, right? Clear? And to care, to what extent they will keep the professional competence and the due care when they are working, right? Due care is very much important again. Just doing is not the case, right? It is very much important. So by evaluating the factors, you can decide to what extent you want to use the internal auditor's work. To what extent you want to use the internal auditor's work. Clear? Right? Right. With that, we'll move on to the standard. Any comments? Those who are on online. Right. You have put some comments as well. Yes. Right. What is your answer is correct? Okay. I just missed that. Okay. Right. This is talking about what we have discussed. Right. External auditors' responsibility related to the work of internal auditors. Right. So then what is again important is to what extent it is relevant for us as the external auditors. The relationship between the, as we discussed, everything what we have discussed, between the internal auditor's work and the external auditor's work, right? So it talks about the objective of internal audit function are determined by management, the applicable those charged with governance, while the objectives of the internal audit function and the external auditors are different. Some of ways in which the internal audit function and external audit achieve their respective objectives may be similar. What is that? That is about the internal controls. Right? This is very important again what we have discussed. Irrespective of the audit function, such function is not independent of the entity as is required by the external auditor when expressing an opinion on financial statements. Right? So we know that internal auditors are not independent. Right? The external auditor has so audit opinion expressed and is not reduced by external auditors' use of the work of the internal auditors. Most important sentence. That is what I discuss, repeatedly. What is that? The for the opinion expressed, and that responsibility is not reduced by use of auditors. Right. I think you will be clear on that. Right. This is what again I discussed to determine whether and to use a specific work of the internal auditors. These factors we want to consider. So, okay, we'll discuss that part. So, you know that what is internal audit function? An appraisal activity established or provided as a service to the entity. Its functions includes, amongst other things, examining, evaluating and monitoring the adequacy and effectiveness of internal controls. That's what we discussed. Right? The internal auditors are the auditors, those individuals who perform the activities of the internal audit function. Internal auditors may belong to an internal audit department or equivalent function, right? Again, this is what we discussed. To use the work of the internal auditors. Right? The external auditor shall determine whether the work of the internal auditors is likely to be adequate for the purpose of the audit, and if so, plan effect of the work of the internal auditors on the nature, time and or extent of external auditors procedures. This is what we discuss. The object of the audit function. So when you are using or determining whether the work of the internal auditor is to be adequate for our purpose, then you have to evaluate the objectivity of the internal audit function, as we discussed the technical competence of those internal auditors. do we keep that, do they keep that the due professional care, and do they have effective communication between the internal auditors and the external auditors as well? That's also, practically there is a concern or issue. There is no proper or good communication between internal auditors and external auditors, most of the cases. Because internal auditors are reluctant to talk with or communicate with the external auditors. That practical issue is there. That is what I have experienced. So we are approaching to the internal auditors, but still they don't like to communicate. That type of the practical concern is there. I think it won't be the case for all organizations, but for some, that internal auditors are like that, because I feel that they feel that they will understand, and they will take all these informations, then they are using our informations. That type of feeling may be there. So, but everything is doing to get more comprehensive knowledge and understanding, and to assess the internal audit function and every internal audit work, internal auditors work as the part of that is useful for the external auditors work. That's the objective, right? Really, that will be helpful for the external auditors, really supportive. The risk will be getting somewhat lower. So if that the company is having the internal audit function and it's going well, right? Right. So these are apart from that again. So again, we have discussed this part, the nature and scope of specific work, and you have to keep on touch on the degree of subjectivity, right? To what extent internal auditors are subjective? Actually, so it depends on, as we discussed, to whom they are reporting. So what is the position they have kept in the organization, in the organization hierarchy, right? So that's what going with the to whom they are reporting. Those are very important aspects, right? Already discussed those things, nothing, just you can go through with this. So you should have proper documentation on the internal auditor's work. Don't take that documents as it is, you can take it up, but for your reference, and you can have some sort of evidence on that. So as the external auditors, now again, as I have experience, just take the internal auditors documents as a photocopy and keep in our file, no use as the external auditors. So what is required is extract that information for audit purpose. That is what is required, right? So then there should be extraction that of internal auditors work in order the external auditors work, right? In that way you want to use the internal auditors work, not just take that internal auditors works for our work. That is not the case. You have to make use of that knowledge into the external auditor's opinion or into the external audit function, right? So that's what again I discussed. The object very widely depend on the size and structure of the entity, right? Anyway, so they are dealing with this type of activities. So monitoring of internal controls, it's a very basic and the more focused area of the internal auditors. They will look into the examination of financial and operating informations, yes, right? So then review of operating activities, review of compliance with laws and regulations. Those are their role. Those are the part of their role. So role will be decided by those charged with governance or the management, right? So these things we discuss: risk management and again corporate governance, right? Right, this is all about SLA 610, use of the internal auditor's work. Any comments? Those who are in online? Any comments? Yes? Any comments on this? Any clarifications? Clear? Yes? Do you have any experience with the internal auditors? Yes? So, do you feel that internal auditors work is important? Hmm? Or only a cost function? Right? So, most of the organizations, again, that's what I want to tell you. Internal audit function is outsourcing. Right? So most of the cases, that's external auditors, separate group is doing the internal auditing as well. So that is the experience I have. So I mean, external auditors group is different from the internal auditors group. So the, let's say one audit firm is working as the external auditors. So that same firm will be working as the internal auditors, but different with the different partner, right? So that is practical. That is how practically it goes most of the cases. So in some cases, internal audit will be done by another audit firm, right? If it is in the same audit firm with the two different groups, then that will be very much helpful, right? So to finalize or to conclude the whole, I mean, to make that external audit work, right? So some, the organizations, they may have their own individual or their own internal audit departments, right? Most of the cases, government sector, they have separate internal audit divisions. Some of the big companies, they have. So then it will be, I mean, if it is a big company, so whole, that units can be whole divisions, so whole subsidiaries and everything that can be reviewed and checked by the internal auditors. They are, if they have a different fund, I mean the division. So it's going in a different ways, but practically for most of the cases it's going as a outsourcing function, right? So how do you feel about that internal auditors? Any experience? Anybody is working as internal auditors? No, right? Right. Any comments? Those who are in online, are you okay? Any clarifications? Yes? Okay. Shall I move on to the next? Standard. What is this? This is SLS 240. The auditor's responsibility relating to the fraud in an audit of financial statements. So first question is, do we have any responsibility of detecting frauds as the external auditors? Yes or no? Yes. Yes or no? Do we have any responsibility of detecting frauds as the external auditors? Yes? Yes. No, we don't have any responsibility. We are not doing the audit to detect the frauds. Right? We do not have any responsibility. But the concern is this: misstatements can arise from either from frauds or errors. Right? Misstatements can arise from either frauds or errors. If it is a fraud not detected by the auditor, and again it's become as material fraud, huge fraud or significant fraud, we term it as now. These days, not now. So previous days we talk about the mega frauds. Right? You see we can use the word mega fraud, not detected by the auditor. Then what will happen? Huh? Then what would be the outcome? The fraud was there, significant fraud was there in the company, but not detected by the auditor. Right? What would be the outcome? Your outcome is you conclude that the financial statements give true and fair view. It means your opinion is inappropriate. It's wrong. Right? Again, we are not to work, or we are not doing the audit to detect the frauds. Our objective is to form an opinion on the financial statements. In that process, we do the audit testings. As a result of that, we will be able to detect the frauds, or we will be able to probability of having frauds. Right? It's a byproduct. We have the byproducts while you are doing the production process. Likewise, while you are doing your audit work, you will be detecting some frauds in the organization. Right? Right? So that can be there, but your objective is not to detect the frauds. But again, the other side, what I am talking as, right? If it is a material fraud and we have not detected, then what can happen? Our opinion will be getting inappropriate. Therefore, we have an indirect responsibility of, direct responsibility is not there. We have a indirect responsibility of detecting the frauds. Otherwise, what can happen is our opinion will be inappropriate. Right? If it is immaterial fraud, no issue. So that is a concern. If it is a not material, not significant fraud, some 20,000 stocks have been taken by the clerical staff employee, or whatever the stock that warehouse employee, that is immaterial. Then no issue for the auditor. If it is a material fraud and not detected by the auditor, then your opinion will be getting wrong. Right? Still, you have a safeguard. We'll discuss later on that part, right? Right. So then, what is a fraud? What do you mean by a fraud? Not to have a comprehensive definition, but understanding what is a fraud. You will find the tax frauds. Intentional. Sorry? Mispresentation. Okay. Purposely hiding things. Yes. What else? Intentional. Intentionally, you can't make the errors. Intentionally, you are not making the errors, no. Huh? Errors are unintentional. It's the nature. Mistakes, yes, mistakes are there as no. Those are unintentional, right? You don't put the entries, if you are, I mean that intentionally you don't put the entries in a wrong way, right? If you are doing intentionally wrong entries, it means it becomes as a fraud, right? Yes, willful evasion. Evasion means not doing that correctly. Okay. You do something unethical, unlawful to get a undue benefit, right? So frauds can arise in three ways. Standard talks about two ways, right? One is misappropriation of assets. What is that? Misuse of company resources. Take something out from the company. Misuse of resources, right? Misuse of vehicles. I'm talking about frequent frauds. Misuse of vehicles of the company or the business, right? Misuse of cash. Frequently happening. Different outlets are there. They will get the money for their sales. They don't deposit that money at on the same date or next date. They keep that money with them for some sort of period of time, and they will use that money for some of the other work, personal work, and deposit that money at the end of the month. How does it happen? We can discuss a lot of frauds. How does it happen? So credit limit is given for the customers, but they will get the money from the customers in advance, right? So sometimes the customers are not knowing their credit limit, right? So even you have the credit, cash sales. So you don't at that date, on that date you don't record for sales. Keep that sales invoice with you, don't put it in the system and get that money. But at the end of the month, you deposit the money and you keep that sales record as well. Those things are happening. Even some of that, the electrical outlets are there because I did the audit for those, companies, good companies, big companies that are related to that electrical items selling, right? Because they have, I don't tell the names, they have that agreements, whatever that I can't remember exactly. Yes, give that old one and get a new one, right? So under that type of circumstances also they will do some manipulations. So I can't explain those things. So likewise, lot of things can be done. Lot of things can be done. So misuse of resources, one aspect. The other one is you are referring financial statement frauds. What is that? Manipulating the financial statements. More frequently happening. Maybe for the tax purpose or any other purpose. Financial statement frauds. You want to reduce the tax. We are paying this much of taxes, right? You have to pay NBT from sales. Even we have profits or loss, you have to pay NBT. No, only manufacturing companies, only some categories they can claim for the NBT. All other companies, it's become as an expense, right? So sales, from sales, turnover. If it is on profit, so no matter. So anyway, then what do they supposed to do? They were trying to reduce reduce the sales, right? I had a one experience, so I don't want to disclose that. So one company, they have I mean it's a restaurant like a hotel. They have a separate 2-3 accounts, current accounts. They will keep one account without disclosing to the auditors even, right? They will put the sales and everything for that particular account. I mean 50% they will put there, 50% they are disclosing. They will collect the VAT even, they don't disclose, and they don't disclose the output VAT as well. Collected that money, keep that in a separate current account. That is not disclosed to the auditors even, so that all the other records are going in a proper way. 50% they don't disclose revenue, the remaining disclose. So they have to file the returns and everything based on the reported revenue, right? So then it goes, I think 2-3 years, right? And then again what happened is that income tax investigation division came and do the review and identify that. So they also don't identify initial stage. At the final day, they identify that there is a separate account. So I don't know how do they detect that. So then, as a result, what happened is they identified that another account is going in directly that sales and everything. So they identified and they have assessed their the tax liability and everything. So for that undisclosed revenue, right? So then they have to pay, I think more than 10 million, 10 million income tax plus VAT, right? So what is that? Financial statement frauds. Financial statement frauds, right? So again, you will find a lot of financial statement frauds. So manipulations. So another scenario, practical scenario is that you may have targets. All companies are having targets or budgets. The employee should work on to achieve those budgets or the targets. Then if they don't achieve, what do they supposed to do? Because if they don't achieve that, they don't get the bonus, they don't get the promotion, they don't get whatever the other incentives. Then what do they supposed to do? There is a pressure for what? To manipulate those records. No sales during this month as up to the level. Then what do you supposed to do? We'll put a sales invoice, or we will create and you make it as the sales, or you have achieved the targets, right? It gives the pressure to do that, the manipulation. Those things are happening. So that's the the one of the reason, or one of that the drawbacks in the budgets. So if you are going with the budgets, I mean for the budgets are okay, no issue with that. But performance is, if it is a performance is based on the budget, or that achievements of the budgets guidelines, or budgeted sales, or whatever the criteria. So then it takes a pressure to the employees, right, to manipulate the financial statements. That has been done by sales division. Even finance people are not knowing about that, right? Sales executive has been done that. Then sales figure has been increased. Then, so that it leads to the financial statement manipulation, right? So far we discussed two, right? One is misuse of resources, that is misappropriation of assets. The other one is financial statement frauds. The other third point is corruption. Corruption. It talks with the two aspects. Corruption talks about two aspects. One is conflict of interest. Conflict of interest. You work as a director of that particular company and you have a separate business, your own business of supplying the goods for this particular entity for a higher price. That's a conflict of interest. You can, I mean, for that particular company, the same product can be purchased for a lower price. Right? That is related to the conflict of interest. Another scenario is, you will select the purchasing or the suppliers. So, to whom you supposed to select? I mean, those are the things practically happen, right? So that's why you have the purchasing committees and all that. So still those things are happening. I mean, not in local context, all over the world. I think I have discussed, the 5% from total revenue will be lost in any typical organization due to the fraud. So in our context, it may be something higher than that. So 5% is covering up most of the cases, big entities, right? Small entities, they may have very less controls. So in our economy, that most of the companies consist of what? Small and medium scale entities. Yes or no? We have 2095 PLCs got listed in CSC. What's that? Very minimal figure, right? So then you may have some other PLCs. So then apart from that, all other companies are coming under private limited companies. So we will have a lot of private limited companies which are coming under medium and small scale. And again, so sole proprietorships, right? Partnerships. Our economy consists basically with micro level of businesses. So then they have very less controls. Then the probability of having the frauds is getting high or low? High, very high. Since we have, I mean that small and medium scale entities are not focusing on controls, right? Even you have the controls, 5% lose. Then if we don't have controls, what can happen? Therefore, this is the area we want to focus more. Even yesterday was the corruption day or something like that. Huh? You don't know. International Anti-Corruption Day. From last year onwards, that has been nominated, right? That issue is there. Not in local context, not only in local context, everywhere. Corruption, frauds. So how do you combat that? Right? So what is the real mechanism? Not just, words. There should be a real mechanism to work on that. Okay? Right. Then, so I'll come back to again our discussion. Do you want to have a break? Yes? Right, we can have a 15 minutes break and come back. So with the rest of the discussion, right? Those who are in online, any comments? Yes? So if you don't have, if you have any comments, you can ask. So we'll come back with 10 to 15 minutes time. So after the break, okay? Right. So in this standard, the auditor's responsibility on the frauds of financial statements, we already discussed very important aspects, right? What's the responsibility on a fraud? So how does the auditor deals with a fraud, right? So then, as we discussed, detection and the prevention of fraud is not a responsibility of the auditor. Then whose responsibility is that? Then who should be responsible on detection and prevention of frauds? Internal auditors. Yeah, management. Those charged with governance. So internal auditors are the part of that, right? So the management should be responsible. They should have a mechanism. They should have a model to prevent or to detect the frauds in their company or in their business. They should have a process. They should have that controlling mechanisms by themselves. Then what does the auditor can do? The auditor can review on their process of detecting and preventing the frauds, right? So then you will be able to get some sort of idea. So what would be the fraud risk factor of that particular organization? What is the fraud risk factor? Conditions or the possibilities of having frauds, to pressure on frauds. In simple terms, the probability of having frauds in that particular organization, right? If they have controlling mechanisms, then probably the frauds are getting lower. Then fraud risk factor is somewhat lower, right? Do they have any fraud policy? Have you heard about fraud policy? Huh? In advance, employees should be informed. So these are the frauds. You can address on those areas. These are the areas. So what if you have done so? This will be the punishment. In advance, inform everything to the employees. Right? Make them aware on those aspects. If you have done so, this will be the punishment. Right? Do you check the track records of your employees before recruiting? That's why you have the refereed references from non-related referees and all that, right? Police reports and everything. Do you have such a mechanism to get the ethical employees to your organization? Right? You should take the ethical employees, otherwise always they are thinking about how to make a fraud, how to commit a fraud, right? Right, those are related to the fraud policy. So it's all are related to the management, that control to prevent and detect the frauds. Okay. So as the auditors, you can review on their process. You can inquire from the management. You can inquire from the internal auditors. Do you come any frauds? So if you find, then what's your course of action? What's your reaction? Do you give that some sort of excuse for those employees? It means still your risk is getting higher. We don't have any guarantee that the same people will be doing the same fraud, or any other group will be doing the fraud, right? So you can assess on those areas. So just important point is what? Detecting frauds is very much challenging, very much difficult. Yes or no? Yes. Accounting error easily traceable because it is unintentional. There is no intention to hide it. There is no intention to conceal that. In case of a fraud, the fraud supposed to hide it. Supposed to hide it, yes or no? Yes. Then it's very challenging to the auditor to detect that. Why? Auditor is not to detect the frauds. Auditor is not doing the audit to detect the frauds. Very challenging. Right? Very much challenging for the auditor to detect the frauds. It is intentional. Why? The fraudsters are more smarter. Normally fraudsters are high caliber employees of the organization. They are more committed. They don't get leaves. Why? That will be replaced by somebody else. Then he is having the fear that he will get caught, he or she will get caught. They are working for a long hours. Those are the characteristics of the fraudsters. It doesn't mean that more committed employees are fraudsters. Right? So these are some of the characteristics of fraudsters. That's why, in banking sector, you have compulsory leaves. Somebody will be replaced in the position. Compulsory annual leaves are there. You have. Sorry? You have transfers. The transfers also very good. Yes, transfers are there. It's also very good, that mechanism or controlling mechanism to reduce the frauds to the employees, among the employees. Even in the banking sector, transfers are there. Right? They don't keep, it's a part of your management policies to reduce the frauds. Otherwise, they will get used to those employees and customers and all the stuff. Then they will do whatever they want. Right? Therefore, even when it comes to that frauds committed by the management, very difficult to detect. If it is a low-level employee, may be easily detectable. High-level or the management level frauds, very difficult to detect. Why? They are educated. They know how to conceal that. They have the power in the organization. Right? They will override the power. Then it's very difficult to detect. And again, white collar frauds, those are called white collar frauds. Again, it's not in a small amounts. If they are doing a fraud, then it's not for a small amount, for a huge amounts. Then again it's very big, most of the very frequently it is material. Yes or no? If it is a white collar fraud, then it is very much challenging to detect. That's why in the practice, forensic accountants are paid huge amounts as their professional fees. Right? So forensic accountants are to detect the frauds. Not only that, they want to detect whether there is a fraud here or not. Right? That's one aspect. And they give the evidence. They can't just say there will be a fraud, there is a fraud. No. That's all right. If there is a fraud, you want to give the evidence to the court of law. You want to support for the attorneys. You want to support the attorneys. Right? Okay. You want to support the attorneys by giving the evidences. Now our context is what's lacking. All are talking about the frauds. No evidence. It's a lacking part of the forensic accounting Oh, I mean not in the forensic accountant's profession. So our experts are not. We don't have such experts. I mean in our context. Or purposely evidences are hiding and not taken into the scene. Right? All those things are happening. Why? All are the same. Right? So that's what I want to tell you, that forensic accounting is different from the the auditors, I mean external auditors or the internal auditors. Right? External auditors are not even right. So as the external auditors, you detect a fraud. There is a fraud here while you are doing your audit work. Then what's your course of action? What's your response on that? While you are doing the your audit work, you identify that there is a fraud. Then what's your next action? What are you supposed to do as the external auditors? You can collect the evidences and you can quantify that. So then that should be informed to the management. That's all. That can be done. You inform to the management. That's all. Right? Your role is not go beyond that. Because what's your role? Not to detect the frauds, but you want to quantify the impact of the fraud to the financial statements. Right? If it is a material fraud, so then quantify that and adjust to the financial statements. Right? Sometimes you have to revisit your work. Why? That client will be a risky client now. So if this is wrong, then the other areas may be also getting wrong. So then we have to revisit and you have to extend the audit procedures. If it is, it's up to you to decide. Right? If it is done by the management, so employee fraud, then again no issue with that because no need to revisit your audit workings. But if it is a management fraud, it's impairing the management integrity. How do you rely on the management? Right? So therefore very important area. So and very much you will find experience or you will find issues in these areas as far as the practical perspective. Right? Right. So what I want to tell you is, so the auditor collect the evidences and quantify that. I mean to quantify the impact to the financial statements. So then make the adjustments by informing to the management. That's your role. But when it comes to the forensic accountants, their role is to detect the frauds and quantify the impact and collect the evidences and support the attorneys. So that level their role is expanded in case of a fraud. Right? I have uploaded one PowerPoint on forensic accounting as well. If the time permits, we can work on that as well. Right. So these are the areas I want to discuss about SLAS 240, the auditor's responsibility on fraud. Yes, those who are in online, any comments? You can listen, you can hear, you can see. Any comments? You have any clarifications? Yes? Right, if you don't have any issues, so we'll look into this, what is in the content. Everything actually I have discussed with you. Statements can arise from either fraud or error. So already we discussed those areas. And again, the error is unintentional and the fraud is intentional. Intentional misstatements are relevant to the auditor. Misstatements resulting from fraudulent financial reporting. That's what we discussed, financial statement frauds. The other one is misappropriation of assets. This is the other point 3 is not discussed in the standard, but still another type of frauds, corruption. Right? So bribes. Some of the areas, bribes are become as a, normal business transaction for some of the areas. I can't discuss because this is recorded. You know that for some of the, industries, bribe is, part of that. If that won't happen, then your work won't happen, never. To that level, it's corrupted. Then whether we like or not, we have to give that. Otherwise, how do we do our business? Right? Right. So if you find or identify that there will be a fraud, so does not make legal determinations of whether fraud has actually occurred. You are not going to the legal aspects of whatever it is. What you are supposed to do is you can inform to the management and quantify the impact and get into the financial statements its impact. That is your role, not beyond that. As we discussed, the primary responsibility of prevention and detection of frauds are with those charged with governance or the management, right? What's the responsibility of the auditor? Is responsible to ensure that the financial statements taken as a whole are free from material misstatements, whether caused by fraud or error. This is again important point. Owing to the inherent limitations of audit, there is an unavoidable risk that some material misstatements of the financial statements may not be detected, even though the audit is properly planned and performed in accordance with the SLA USS. Right? There is a probability of that as well because of the inherent limitations of an audit, as well as fraudsters are more smarter than the auditors in some cases. Fraud, resulting from a fraud is higher than the risk of not detecting one resulting from error. Right? It means errors where some comparatively easily we can detect compared to the frauds because of the intention. Again talks about the management frauds and the employee frauds. As we discussed, management frauds are getting high risk and detection is very much difficult compared to the employee frauds. You should have the professional skepticism and detecting errors may not be effective in detecting frauds. Okay. So these are the objectives already we discussed those things. Frauds and intentional act by one or more individuals among management, those charged with governance, employees or any other third parties involve the use of deception to obtain an unjust or illegal advantage. Right? So what is that in simple terms as we discussed? It's an intentional act to obtain an unjust or illegal advantage or the benefits. As we discussed, fraud risk factors, events or conditions that indicate an incentive or pressure to commit fraud or provide an opportunity to commit the frauds. Right? So there is no specified date to deposit the money to our bank account. So what is that? It's given an opportunity to do the fraud. You should have the professional skepticism on that to detect the frauds. So, as we discussed, investigate the inconsistencies. As much as possible, try to get the original documents, authentic documents. Right? Again, the risk assessment process, you should assess the management, or you should make the inquiry regarding management assessment of the risk that the financial statements may be material misstated due to the fraud. It means you want to evaluate, as we discussed, the management process or management mechanism to investigate the frauds or to detect and prevent the frauds. Yes, as I discussed, management process of identifying and respond to the risk of frauds. Management's communication on frauds and all that. So, regarding employees with employees and all that. Yeah, regarding the internal audit function. So, what they are supposed to do in case of detecting and preventing frauds. So, check the journal entries. So, frauds are done most of the cases through the journal entries. Right? They will pass the entry. So that's why, if you want to put an entry, you should get the approval. Journal, if you are, so in some companies, if you want to pass a journal entry, you want to get approval from whom? In the top level. So I have experiences nowadays, even working on some of the audits. Accountant pass the journal entries as and when they want to pass the entries. Right? So practically, some good systems, they don't allow to pass the entries after that year end, or after 7 days they will give some period to pass the entries, after 7 days or 10 days after the financial period. So they don't allow, the system doesn't allow. These are the conditions or the controls for a good accounting system. So some companies at any point of time, or whatever the period, whatever the year, they will pass the entries. These are not the good controls. So then accountant can do the fraud and pass the entry. That's all. Those things are happening. Right? So they are look into the test the appropriateness of journal entries, and work on the individuals involved in make inquiries from the individuals involved in the financial reporting process, select journal entries, consider to need to test the journal entries, and review accounting estimates. Again, very much vulnerable to the frauds. Now we all are going with the fair value accounting or fair values. So what is fair value again? It's a part of estimation, right? You want to assess the fair value. So all are not tradable. All assets and liabilities are not tradable. So if you go for the fair value, so it's become as an estimate, right? So then you have an opportunity for what? To manipulate those account balances. Look into that. Do we have any estimations? So then is it reasonable? Is it acceptable? So you have to look into those aspects. Otherwise that will become as a part of financial statement frauds. Evaluate whether the judgments and decisions made by the management, and perform effective review of management judgments and assumptions, right? So you should have a proper documentation on your work. So it's a very important aspect. That's all. I think everything which is covering in the standard I have discussed with you, right? Any comments? Yes, those are in online. You have any issues? Any comments? Are you okay? Can you hear? So, right. Any comments? So, I mean that your response is something not satisfactory, right? Right. So if you don't find any comments, yes. Right. So if you don't find any comments, you can look into that. I have uploaded some two cases. Please look into that. So can you download that two case studies? I mean, one document is there. Example in the LMS. Can you download and look into that? Huh? It's the answer. Don't see. I mean, you can look into the answer once you look into the case studies. So this is the answer. I put the answers as well. Right? Please look into this. You can download. It's in the LMS. It's there, right? No? For example, it's there. It's there. Fraud example. Final one. Right. This small, that question asking that during the internal auditors of that particular company discovered several discrepancies in the inventory records. In a statement made to the board of directors, the internal auditor said, I think that someone is taking items from the warehouse. A physical inventory count is performed every 3 months and it has become apparent that about 200 boxes of flat packet chairs and tables are disappearing from the warehouse every month. We should suggest someone to, right? We should, yes, we should get someone to investigate what has happened to the what has happened and quantify the value of the loss. So then, in that type of process, what's the role of the external auditor? What's the role of the external auditor? Sorry? To? Yes, that's the objective of the external auditor, it's all right. But how do we tackle that type of situation? How do we deal with that type of situation? Now, there is a probability or the possibility of having a fraud in the inventory of that particular company. So, in that type of circumstance, what's the role of the external auditor? Right? So, internal auditors, in external auditors, risk is somewhat higher in case of inventory. They want to focus more on that area. Right? Sometimes you want to go have a physical stock verification again. Right? So, then look into really what has happened. Yes? You can perform the cutoff procedures. So, what do you mean by cutoff procedures? Right? So, you can get the final GINs and GRNs. So, I mean final 10 before ending the financial period and after ending the financial period, and make sure that those have been recorded properly, right? And get a confirmation from your what do you call that, company or the management, right? And do more testings on that and make sure that are there any frauds has happened, because it's pointed that I think that someone is taking. So, there is no such guarantee that fraud has happened, right? So, get more understanding, get more evidences, audit evidences on where stocks, and make sure that is there any fraud or not, right? So, and do the retrospective reconciliations from the date of the stock taken to the year end or the 31st March, right? So, likewise you can have more evidence, more testings, and even communicate with your internal auditors, with the internal auditors, and have more understanding what they have done. So, what is the course of action of the management in case of stocks, and check the control where stocks. So, likewise you can have lot of more audit procedures and collect more audit evidences on what has happened on this area. Right? Now, there is a red flag. This is what is called red flag. Right? There is an indication. Then you have some sort of the idea. So, in some cases you don't get any red flags. It means nobody is telling you that there is a probability of having a fraud in that area. So, in that case very much difficult to detect. Now, you know that there is a issue in inventory, then you can focus more, right? This is a red flag is there, but in some cases you don't find is there any fraud, any indication is not there, right? So, then that's why this is challenging to detect the frauds, right? So, you will be given the answer, you can go through with that, it's comprehensive answer, right? And again here, so what's your role is, if the fraud has happened, right, so you have to quantify that. So you ask the management to quantify that again, and that get the implications to the financial statements. If they don't do so, so then it becomes as a, it leads to the modification to the audit report if it is material, right? What's the answer there? It's given. Right, so these areas also we want to look into that. Are there any obsolete items, any that other items that is non-moving, slow-moving items, inventories held by other parties, third parties. So inventories are in the separate locations. So those are part of audit testings, and identify the nature of the stocks or the inventories, industry practices, and all that. Okay. Then example 2. So Bush Bay Hotels Company operates chains of 18 hotels located across the country. Each hotel has bedrooms, a restaurant, and leisure club facilities. Most visitors to the restaurant and leisure club are hotel guests. However, these facilities are open to the public as well. Hotel guests generally charge any cost to their room, but other visitors must make payment directly to the hotel staff. During the year, senior management noticed an increased level of cash discrepancies and inventory discrepancies, and they suspect that some employees have been stealing cash and goods from the hotels. They are keen to prevent this from reoccurring and are considering establishing an internal audit department to undertake a fraud investigation. Right. Then again, of the external auditor, again there is a indication on cash and inventory. These are very, that probable area to have the frauds. These are very practical cases. The hotel, same thing happened. I have experienced that, that hotel manager is keeping that money for longer period of time. At the end of the month, they will deposit the money. So until such time, he will do whatever the things he or she wants. Don't allow that to happen. So one day what happened is, that person is getting that money and go away. Definitely that will happen. We don't know which date that will happen. So if it is a huge amount, and again he or she is not in a position to reimburse that, then what happened is, disappeared. Don't allow that to happen. Keep your controls. So same thing will be maybe here, right? So again you have to focus more on those areas, and having the internal auditors, something beneficial to the company to reduce that type of frauds or the misuse of resources, right? So then again, so collect more audit evidences on cash and other areas. So do that whatever the audit testings, and come back with your opinion that are there any frauds on those areas, yes or no. If it is no, so if it is yes, if it is material, right, quantify the impact with the help of the management, and any fraud risk factor is there, so you can evaluate those controls and everything, right? So even you can inform to the management, these are the areas where you want to have more focus as far as concerning the controls, right? So then finally what you have to do is, so make sure is there any fraud or not. So if there is no issue, so if there is a fraud, so then get the support of the management and quantify the impact and make the adjustments to the financial statements. You ask the management to make the adjustments to the financial statements, right? Otherwise it leads to the modification to the audit report if it is material. So that is the implication of this standard, or if the frauds on financial statements, right? And how do we apply, or how do we deal with the fraud? So where that companies having such frauds, so as the external auditors, how do we deal with, right? Any comments, any clarifications? Those who are in online, okay. So answer also given in a comprehensive way. So answer is only a simple guideline. So you can add some more points as we discussed, and so it's up to you to that the logical answer, right? Right. Any comments? Any clarifications? So I ask you, I'll be asked to conclude the sessions a bit early today because we have a lecture by 12:15. So with that, I'll be winding up the session. Any comments before concluding the session? Right? Okay, then we'll meet on next week. So please please start on working your assignment work and do a quality work. So then you will get a more marks. Otherwise, less marks. Right. So with that, we'll wind up the session. Thank you very much. We'll see you on next week.